What are the expenses you can deduct as a real estate agent on your tax return? Well, in this video, I'm going to go over my top 9 deductions for real estate agents. But before we dig into the actual deductions, let's talk a little bit on an overview on how real estate agents are taxed. Now, when you're taxed as a real estate agent, or actually when you are a real estate agent, I should say, you receive commission income and your broker is going to give you a 1099 NEC, non-employee compensation. When you get a 1099 NEC for tax purposes, you are considered a business. And typically you start by filing that business on Schedule C of your personal income tax return. But the most important thing to think about here as a business is you're going to have that business income, which is going to be your commission income on that 1099. And you're also going to have business expenses to reduce that income down to the taxable income, or the amount that the tax is going to be calculated on. So we want to get as many deductions as we can to offset that income in order to lower our taxes. So that's kind of the general overview. So what are those expenses we get to deduct against that income? Well, that's what I'm going to go over. Number one is going to be your license and dues. Now, this should be a pretty obvious one, but some people don't think about this, but your license, your real estate license, any fees you pay to renew or even get that license, and any dues you pay to different associations, groups, your MLS dues to get on the MLS services, all of those expenses, because they're incurred for the purpose of generating income in the form of commissionable sales, those of course are business expenses, and you get to deduct all of those expenses against your income. And so that's the number one. We want to start off gathering all those information. Number two, of course, is going to be advertising and marketing. So you're going to want to advertise yourself and put yourself out there in order to generate new leads. Now, it can be direct marketing. It can also be paying for different lists or things like that. Anything you're doing in order to generate new leads, new contacts, even referral partners per se, costs associated with that kind of marketing and advertising. That all is because it's in the pursuit of generating new business, either directly or indirectly, then that is a business expense and you can deduct it against your business income. The next one's a big one that people don't forget, or sometimes forget about, or forget to actually document. That's the biggest issue on the next one, and that's the vehicle expense. As a real estate agent, you're going to be driving a lot of miles, going to showings, open houses, and various different events in pursuit of your real estate sales business. All that expense on your vehicle is going to be allowed to be deducted as a vehicle expense deduction. Now, you have two options when going about this route. I typically recommend using just the standard deduction, not just because it's easier. Usually it actually comes out to be a more benefit for real estate agents because you drive a ton of miles. And so the standard mileage deduction is going to be simply calculating out tracking, I should say, the number of miles that you drive for your real estate business, either, like I said, to open houses, different showings, even going to the office supply store to get supplies for your office or for your real estate business. All those are vehicle business miles, and you multiply that by the current mileage rate that is published and updated by the IRS at least once a year, and that becomes your deduction. Now, alternatively, you can use the actual expense method when deducting your vehicle expenses. And that one, you still need to track your business miles, but you also need to track your personal miles, because then we're going to take that ratio, that percentage of use of the vehicle for business purposes, and we're going to multiply that by all the costs of the car, including the actual cost of the car, gas, oil changes, tires, any of that, registration, insurance, all that we use that percentage method on. Now, typically, like I said, because of the number of miles you're driving, The standard mileage rate usually works out better, and it's certainly a lot easier, but you have those two options. The important thing to note is that both options require you to keep a mileage log. All right, the next item is going to be education and travel. And I kind of lump these together because travel is typically, as a real estate agent, going to be for educational purposes. So you're going to want to continue to educate. You might need that continuing education requirements for your license, but you also want to invest in yourself to become a better real estate agent. And all of those expenses in pursuit of in educating yourself and learning more about your craft are, of course, going to be business deductions in the pursuit of generating additional income and thus become a reasonable and ordinary business expense and deductible on your tax return. All right, the next one's a big one, and it definitely gets missed a lot, and it's the home office deduction. And why this is a big one is because these are expenses you're incurring no matter what. You are already incurring the cost of living in your home. Now we're just going to take a portion of that and make it a business deduction. So it's not additional costs you're using or spending, I should say, because you're a real estate agent. We're just allowing to take some of our personal expenses and make them business. Now, again, like the vehicle deduction, there's two methods on this one. And this one I find to be a little bit opposite. I like this actual method, but there is a simplified method. You just take the number of square feet of your office, get the tape measure out, measure it up, and multiply it by the published rate that the IRS gives us. Now, this case, the actual expenses is almost always going to give you a better deduction. And similar like the vehicle deduction, we take that home office space, we divide it by the entire home square footage and get our percentage. That percentage, we multiply it against the indirect costs. So that's going to be your utilities, your water, your gas, electric, any cost to own and operate the house. If you own the house, your taxes, if you have a mortgage on it, the interest and insurance portion of your mortgage, not the principal portion, because that's covered as part of depreciation. You can take depreciation against your house. If you rent the house, then it's just going to be the rent times that percentage. Add up all the expenses it costs to own and operate the house, multiply that percentage, and that becomes your deduction. It's a great deduction for two reasons. One, like I said, it's personal expenses you're already incurring that you get to make business. And the second one is your home office you can establish as your primary place of business. And now those business miles, going back to the earlier example, can start from your home because that is your first place of business, and you then drive to your next listing showing or wherever it might be. But that becomes a business. If you don't have the home office, then that would really be a commuting expense to where you're commuting to your first place of business, and then from then on would be business. So you get extra miles by establishing the home office. All right, the next one is costs associated with the sale or closing of a sale. Sometimes you would actually pay for some expenses as part of the deal to get the deal done. If you any of those costs, filing fees, title fees, anything like that you're paying just to get the deal done, those, of course, are in pursuit of income and can be deducted. Not as common, but definitely something if you do pay for part of the deal, take the deduction on your tax return. All right, the next one is going to be for any employees or contractors that you might have. So this can be a couple of different things. One, if you have a virtual assistant or some sort of assistant helping you with administrative or paperwork, of course, then a cost of expenses for paying them, whether they're a contractor or employee, those are tax deductible expenses against your income. It could also be different services. If you have a stager service or a cleaning service that you're doing on your listings that you're showing, you have people that come in and do work for you to make it show ready. All those people, those are probably going to be contractors. Their costs are tax deductible as well. All right, and the last one is a big one. Uh, it's going to be the gifts you give at the end of a deal. A lot of people give their clients a gift when they close a deal as a kind of a housewarming gift or something of that nature, and those expenses are deductible. Now, there is a limit on those. Only $25 per person is allowed to be deducted. So if you give gifts, you do want to actually track those and make sure you only deducting that 25% because that is all that is allowed in the tax code. But you do want to claim the deduction for the portion that you are allowed because you want to get all the deductions that you can. So that one's a little more, benefit and a limit on it, but you still is a deduction. So those are my top 9 deductions. And if you stayed this long, I'm going to give you one bonus deduction. And this isn't really a deduction. This is more about a tax savings. When you're a real estate agent, you typically, with that 1099, as I mentioned, you're going to file Schedule C of your personal tax return. Now, there's a strategy where if you get an LLC, you can actually elect to be taxed as an S corporation. Now, the S corporation doesn't unlock any additional tax deductions. All the 9 deductions I've mentioned thus far are deductible whether you file as Schedule C or as a S corporation. The S corporation, however, allows you to save money on what's called the self-employment tax. And that can save you, tens of thousands of dollars depending on how much income you have. So something to watch out for, something to talk to your tax accountant about, whether it makes sense for you. You want to make sure you get tax savings because there are additional costs associated with that. But do look into it and make sure you take advantage of that if and when it makes sense for you. All right, if you made it this far, I want to thank you for watching. And if you want more tips like this, feel free to subscribe. If you have comments about anything I've said, please leave them below.